Hey, it's Randy Patrick here, kind of with your distressed property thought of the day, so to speak. I was reading some articles over the past weekend, and I actually subscribe to lots of financial, I guess you could say, reports and ebooks and newsletters or whatever. And I found something that was kind of interesting. And here's the most interesting question: why are prices still going up when the American home ownership is at a 50-year low? So that's quite the interesting question. So again, as everyone knows, our home ownership rates have dropped dramatically over the past few years. We're at the lowest point in slightly over 50 years as a amount of families that actually own a property. That number is expected to drop even further over the next 7 or 8 years. So that's where we're at. Yet prices are still moving up and going higher and higher. So according to the CaseShiller reports, those guys do a lot of analysis. Prices are up $40,000. The average home is up $40,000 from the lowest point, which was January 2002. Okay, kind of at the end of the housing crisis. It's very competitive out there right now. A lot of action happening in the real estate market. There's low inventory and lack of inventory in many metro locations, which is causing undue stress, which also causes an increase in competitiveness, which causes prices to rise. Rent rates are up as well too, so those are increasing dramatically, and people cannot afford to buy homes right now. So the average person is getting priced out of the market. Now, why did this occur? Well, when we were back in 2012 and homes are at their cheapest level with the carnage from the housing crisis, all the big institutional investors and hedge funds jumped in, started buying homes at the auction, started buying homes via short sale, and they spent billions and billions of dollars accumulating all these properties. What they're doing now is obviously they're renting the properties, and they've fixed them up and increased the rent. They've also pushed the envelope on their purchases because for them it was a financial equation. They could afford to pay a bit more to get the acquisition and then do their little rehab and get somebody in there because they were looking at a longer payoff. Well, now you've got a situation where these larger homeowners, these institutional investors, are now offering to sell their property back to their rental client and do preferential rates and treatment, etc. So, of course, it has to be at their number, which is an overplayed number. Now, where we're at now, as I said, is a lot of people can't even afford to buy a home, and they're having trouble with rent as well too. So prices can't sustain. They can't be sustained like this. They will ultimately go down. Real estate is a cycle, and I believe that very strongly, and I listen to all the reports and listen to all the people out there that are much more educated than I am in this business, and we see that the market is shifting and things are going to trend down again. So real estate is a cycle. We've gone through the low, the peak, and the low, and up again. So the reason why they haven't gone back down, and this is off the report I was reading, is the fact that we have low interest rates. So, but having low interest rates doesn't allow people, they're still being priced out of the market. So low interest rates are not stimulating more home ownership. It's actually doing the opposite. So if rates rise to normal interest rates, 5, 6, 7%, you're going to see prices scale back 30 to 40%, because when you have threes and twos out there and they're actually doubling to fives, sixes, and sevens, as far as rates are concerned, your payments are going to increase dramatically. So what you see here is that that's going to basically wipe out all the equity that we have gained over the past couple of years. So it's a very sort of vicious circle here. So what are we to do? Well, really is position ourselves. What we position ourselves is that be ready to help the people in financial distress, because it's going to happen. It's going to get there. We hear little bits on the news wires about millennials, and things are picking up in that aspect as well too. But there's not enough people that are buying homes that can take out a big chunk of the inventory and actually sort of sap up that lack of home ownership. It's just not happening right now. So we're going to see more short sales in the future, because if people are buying at the peak, and if they're buying at with financing that has become more like subprime. A lot of lenders now are offering the 3% down. Some are offering 1% down with different sort of grants and localized support, and that's going to cause problems, because I look at it going, if you're putting only 3% down and you're buying the peak of the market, the minute there's a shift, you don't have equity. You don't even have equity now when you buy at 3%. Your closing costs and commissions will wipe that out. So if you think about it, it's pretty tight out there. So how do we help the people? Short sales. How do we help the citizens? They're going to be in distress again. mortgage violation recovery system. It's something that we have here at my office. It's called cash flow bailout. Why does that work? Because more and more people will be turning to pre-foreclosure, and they'll need solutions, whether it's short sales or loan modifications or workout plans. They're going to go through that process with their lender, and I can tell you based on the history what we've seen, the lenders always make mistakes and make violations, and this is an opportunity where we can help homeowners recover some money for those issues. The opportunity is presenting itself again. Be ready to acquire property like the other investors did it, or the bigger investors. There's no reason why when the numbers come down again, we all can't acquire rental property. Financing, there's a lot of private money out there that can hopefully help you buy, fix up, and or just buy and hold the property and put a renter in there. There'll be a lot more of that coming down the pike. And as I mentioned, we have a full cycle under our belt right now. So we should be able to go back and look at the signs that happened in the first cycle, which I think we all understand, and we can look at today's market. Everyone's talking about the shift in the upcoming, the time that we're going to have a decrease in value, which is coming soon. So we can see everything that happened back, 7-8 years ago is occurring right now. Just again, maybe colored a little differently, flavored a little differently, little different twists here and there, but the repetition is there. So again, be prepared for it. That's sort of our distressed housing news flash of the day. That's what I'm trying to do, and hopefully you'll jump on this as well too. Thank you.